Welcome to Inside the Markets, official podcast of StockPulse.com. With me now to break down the recent downturn in the markets, Allan Laboucan of Allan Reports. Al, appreciate the time as always here. Let's run through these markets here. A little overdone perhaps, but coronavirus just the trigger, or is this something that was waiting to happen?
Well, it's the one thing that I think is getting lost in a lot of this is that the market prior to this correction over the coronavirus was pretty priced for perfection, to say the least. It was trading at about 20 times earnings, and anytime people are buying stocks, when the Dow and the S&P 500 are trading at 20 times earnings, they need their heads examined to start with. And I think I had said in the past that the market was just looking for an excuse to sell off. Well, they found their excuse in the coronavirus. I mean, how serious is it going to be? Is it another SARS? Is it the Black Plague? Or is it somewhere in the middle? Or could it even be as bad as the annual flu? I think it's a little overblown. But again, I think the market was just looking for an excuse to sell off because, anytime you're so priced for perfection, and then you got to look for reasons why perfection might not be delivered. And, I think there was several signs of that. And, now this coronavirus sort of, popped the bubble, if you will.
So turning our attention more to the junior resource sector here, certainly some damage has been done, some charts broken. Anything lead you to believe, other than what you already have, that gold is king and the fundamentals support that?
Well, I think that, I don't really see the big market, the Wall Street stocks, the bubble getting burst on that. It's really going to cause people to get back into realistic economics. On the other hand, I see things like, the 10-year Treasury is now trading at a yield of 0.5%. It doesn't really matter what number you use for inflation, whether you use the cooked up ones by the government or by anybody else, or just use your common sense and go purchase something from year to year, and you'll see there's a lot more than half of 1% of inflation. So regardless of what metric you use, we're now trading at negative interest rates on the US 10-year bond. Now it looks like the 30-year is going to head towards a similar fate. I've been saying it for a long time. In a yield-starved world, gold is going to be king. And another factor that I think you have to look at is what's happening with the currencies of the world. They're all in a race to zero, and they're winning that race. In that kind of a horse race, you definitely want to be buying gold, not those currencies that are all fighting their way to zero. So those are more of a factor in what I see causing the price of gold to go a lot higher and bringing new money and new blood into this market. Because at the end of the day, investors are always going to be looking for yield and performance, no matter how scared they are. And one of the best places to find that right now is in gold, silver, certain other commodities. I'd be looking at oil right now, as badly as it's gotten beaten in the last couple of days. That's what I mean by, realistic economics starting to take hold again, and not this, paper world of, heroin-induced interest rates that are trying to prop up the Dow Jones Industrial Average and the S&P all constantly. I think people are going to have to start looking at, realistic economic stuff again. And in that kind of a world, I'm pretty optimistic about where, metals are going to go, and certain metals are going to go, and good quality exploration stories.
Well, governments say don't let a good crisis go to waste. I'd imagine we use this recent downturn in the investment world, equated to the junior resource sector, of having maybe some amazing opportunities here, some new and improved entry points per se. profit among chaos here?
Yeah, before I went into that, Rob, I wanted to talk about something that we had been talking a little bit about prior to the PDAC and then during the PDAC is the real lack of news in the sector. And I think that, if you look at it through the industry through a news perspective, and especially that the drill rig is the truth machine and the thing that really drives these companies forward. If you keep your focus on what the truth machine is telling you, right now, what it's telling you is there's not a lot of exploration going on. There's not a lot of quality exploration going on that's generating good drill results. This is a opportunity where not only do I see gold and other metals going up, but I see it's a great opportunity for those that can filter out the noise, which is your stock promotions and, oh, these guys are involved and they've had success in the past on these stocks and, oh, well, they found this before and they're going to find this again. At the end of the day, that's a bunch of noise in the sector. What isn't noise is what's actually coming out of the end of that drill bit. And that's what we focus on. And that's what I think investors should be focused on as well. You want to focus on those that, are doing drilling and are coming out with news and that they look to be, moving the ball forward. And those are the kind that can sort of get on fire and just take off. And so, I think we do a great job of filtering out the noise from the signal. And a lot of the deals that we follow, take, for example, Amex, one of our sponsors. Amex has one of the best projects that I've come across in the last few years. And it's high-grade gold. It's got a good, tight share structure. They're near roads, so they can keep their costs down, which is reflected in the fact that they don't have a lot of stock out, and they continuously keep on delivering with the drill rig. But then you look at the stock chart in the last couple of days, and like for today, for example. Nothing has fundamentally changed with the company, but the stock is down 10% today. It's trading at $1.35. The 52-week high is $1.90. The 52-week low is 58 cents. So you're trading right in the middle of that 52-week range, and here you've got an exceptional company with an exceptional discovery. Those are the kind of things that I think you want to be paying attention to when Mr. Market is deciding to take everything out to the woodshed, whether it should be out of the woodshed or not. Skeena Resources is another one that I've been pounding the table on for quite a few shows. 52-week range, $1.20 on the high, 33 cents on the low. It's down 10% today. Nothing's changed with the fundamentals from day to day. They're still drilling into what was an exceptional mine that back in the day when it was in production, they need everything under half an ounce got left behind by the miners because it wasn't profitable. Now you've got gold trading instead at $250, $300 an ounce. Now you've got it trading, I think it won't be too long before it's trading at $2,000 an ounce. Put that higher number on the price of gold, and these quality stories like Skeena, like Amex, like McEwen Mining, Pretium, Premier Gold. These are all high quality, very limited amount of risk. If you look at some of the exploration stories out there, look at my company, for example. I think it's a sort of a blueprint of what you should be looking for in exploration. We're drilling. We're drilling in a project that has infrastructure all around it. We're in one of the lowest cost jurisdictions in the world. It has exceptional geology, and it's underexplored, this whole region. Then you look specifically at our project, and Advanced Gold has a 3,200 meter long continuous chargeability anomaly. That's what you would put into the world-class target category. Then we've done some limited drilling into that geophysical anomaly, and we've proven that that's coming. The geophysical anomaly is coming off of a sulfide system. So when you're talking about sulfide systems in that kind of size, once you start to figure out the overall system and the plumbing of that system, that's the kind of thing that could turn into a company maker very rapidly. And people aren't really paying attention to stuff like that these days. These are the things that you want to be looking at to take advantage of when the valuations are so cheap.
Let's dig into the gold market here specifically, Al. Certainly a lot of fear recently created with the coronavirus. Market's overdone, sure. That was probably needing to pull back anyway. But let's talk about supply chain and how things might be affected. Travel industry, certainly, cruise industry, cars not being made in South Korea. How does this play out? The markets were overdone, needed to pull back anyway, but shouldn't gold thrive in an environment like this?
Well, again, the biggest mover is the price of gold, and what you're portraying there is a fear-induced market. Well, fear is a very positive thing for the price of gold, especially when you look at the long-term fundamentals. I mean, for every company that you hear about, your Barricks of the world and your Rand Gold Barrick now and Newmont and all these other companies, they're producing gold every day. And yet you go look at the pipeline, which is, covered by the companies we follow, which is your exploration and your development companies. And we got a good filter, and how many are out there that are we're following 10 to 20 companies. Well, those 10 to 20 companies can't even start to fill the weakness that in the supply chain that's coming. And I think that that's really what a lot of people don't really get, is how weak the supply chain is. They think because the price of gold is high that people can just turn on production, and it doesn't work like that. They'd already have it turned on. It takes 5 to 10 years to get a discovery into production. And you look at the pipeline of what's out there on the development side and on the exploration side, and there's a big supply crunch coming that doesn't even really need a fear trading, a high fear trading market. And you can see it in the stock chart as well. I mean, we started out, February last year, we were trading at $1,275. Today we were as high as $1,700 on the price of gold. That's a pretty substantial move for a commodity like gold in a matter of a year. And I wouldn't be surprised to see us with that similar kind of move this year. So, fear is one thing that I think is going to move gold stocks higher. Good selection, I think, is going to help our audience and other investors to really juice up their performance if they can stay away from the junk stories that are just highly promotional or culty priced, and stick towards quality of, buying it at good valuations. I think you're going to see some fantastic performance as gold goes higher.
So you set the table here for gold being strong. How does the capital ultimately find its way into the junior resource sector?
Well, I think that, as a big audience start trying to get into a small door, that you're going to cause a bit of a panic there. And it will probably, a lot of junk will rise in that kind of an environment. But what my hope is that, we start to see the best quality stocks being the best performers. And I think that big audience trying to get into a small door is coming, because where else are you going to put your money these days, Rob? You look at the Dow Jones, the big cap stocks. Well, now they're showing the Dow Jones is trading like a junior that just had horrible news. When your best quality, so-called best quality, is getting hammered like there's no tomorrow, Where do you look? Well, you could look at bonds, but they're negative yielding right now, so that's a guarantee to lose money. You could look at things like gold and gold stocks that are, doing pretty darn good. And as things get better, I think you're going to see a lot of that generalist money is going to start to come into gold like they did into the weed and the weed and the crypto stocks. And this will be the next euphoric sector. And, looking for call. I mean, there's going to be a point, Rob, where even junk is going to move up dramatically. Just because I don't think that there's enough exploration happening out there and development to really feed this demand that's coming. When you've got nowhere else to look, that's generally when people are going to start looking into this sector, and they're running out of places to hide.
Well, you certainly laid out the case for these juniors and gold hanging in there. So before I leave you here, why don't you give us a quick 60, 90-day look into the future and how you see it, and how the mainstream picks up the pieces on the Dow. If nothing else, I got to believe confidence is a little shaky, and they might start looking for those other opportunities.
Right now, I'd probably be making the case that it's getting pretty oversold. When it spiked, when your Dow Jones Industrial Average trades like a junior that just delivered horrible news, and it's got a mountain of stock out and everybody's trying to sell it. If the fundamentals are not that bad, well, then you want to be looking the other way. And right now, nobody's looking to buy the Dow Jones Industrial Average or the S&P 500, which makes me as a contrarian start to say, well, how much of the negative action is over with? Well, probably 80% of it. There's probably another 10 to 15% on the downside because, these things tend to trade in, they go too far in either direction. So, as much as I was talking about, those big cap stocks being priced for perfection, right now they're getting priced for depression, and that's probably not going to happen. So I could see a recovery. Now, will that recovery reach the last key technical resistance levels? That I don't think will happen. So I think you'll get a pretty healthy rally, and then another leg down that will make this a choppy market for the rest of the year with a downward bias. But that doesn't mean you can't make money in it. You probably looking from here to the next 10% down is probably a good place to be looking at buying some quality that's, on super sale right now. And I'm not an end of the world kind of guy. I've been through too many of these things. I've been in the market since 1993. So I saw the Asian currency crisis. I thought I was even investing in 87 that's when I first started investing. I've seen, a lot of these corrections, 2008, and spikes never last, whether that spike is to the upside or that spike's to the downside. So we've had a pretty dramatic spike on the big cap stocks that, is probably getting a little overcooked here. And we could probably see a rally when they announce the next quantitative easing. Now, the good thing about that is I think that's going to put some more pressure on the U.S. dollar and put upwards pressure on the gold and the gold stocks. So, my feeling is, I wouldn't personally be looking at buying the Dow and those other things and trying to play the pops on the upside. I think the pops on the gold are going to be more significant, but most people don't invest in gold or gold stocks. So if they're looking at buying this dip, I think they're probably pretty close to the bottom. Maybe another 10% on the Dow and the S&P 500 kind of thing.
Okay, well, good breakdown there. Appreciate that. A final word for investors here in closing?
One thing that I think a lot of investors should pay attention to is that when everybody's running for the cover like they are right now, that's when you want to be looking for, the turnaround. go to more positive. Just like with what's happening with a lot of the gold stocks right now, even while gold is getting stronger, a lot of these quality stories are trading at significant discounts. You don't make a lot of money, following the herd. You make a lot of money in this business, whether it's from the Wall Street to House Street or Bay Street in Toronto and Canada. You make it by going against the herd, and everybody talks about being contrarians, but the reality is they're really not. You look at like I said, look at the Dow Jones Industrial Average right now. How many contrarians are out there right now? None. They're all throwing the baby out with the bathwater, regardless of what the valuation is and the earnings prospects of those companies going forward. Right now, there's not too many contrarians in the gold space because gold is going up and the gold stocks are still trading at huge bargains. But that's where the money is made, and I think that you want to use these educational time frames to learn from them and start thinking in a different fashion than following the herd.